Alrighty, folks, when this man speaks, I certainly listen. I'm assuming Taylor does too, but we will hear about that in a minute. Paul Tudor Jones, very respected individual on Wall Street, has a track record that is very envious of most people, I am sure. But he is out saying something about Q1 that we need to talk about. Taylor, what's going on?
How we doing? This is great. Paul Tudor Jones is funny because he's got like a southern redneck draw actually to him, which is great because I grew up in a redneck town, so I always assimilate well to those types of people. But he's amazing. The reason why Paul Tudor Jones is someone that you want to listen to is one, his market calls have been very, very good throughout history. But the other thing is he's not a perma bull or a perma bear. He is not
Exactly.
always on one side of the trade or the other. There are too many of those people. Paul looks at things honestly from an outside perspective and invests his clients' money accordingly. And he's done it a masterful way over the last 3 decades now.
Yeah, when I think of Paul Tudor Jones, it's exactly what you just said, right? There are people out there like Peter Schiff is the probably the greatest example for me, who is always a gold bug, always the world is going to end. That's my summary of Peter Schiff.
Yep. Yep.
And
Fair.
eventually he'll be right, right? It's just, broken clock kind of stuff. But when I think about Paul Tudor Jones, and I mean, I remember studying him 30 years ago, right? When I was getting my MBA, right? He was one of the guys that we watched or we studied. And that's what I really would have said as well. He's not always a bull, not always a bear. He operates and he does kind of macro down,
He
right?
does. Absolutely.
Right. Versus kind of bottoms up. He's macro down, which I fully respect. And so I don't know if you saw this. He's not in the media a lot, but just over the weekend I read that he's calling for a Q1 recession. That's when the next recession starts. Did you see it? What do you think?
So I don't know if I saw the exact comment that he made from that, but last time he was on, and to your point, he's not on all that often, but it wasn't that long ago. And he talked about a recession coming, but he talked about with a recession, a 10 to 12% pullback in the stock market is what he was calling for. And we just got some of that right now, right? So over the past 2 weeks or 3 weeks, we did get, I guess since mid-July, late July, we got a 10% pullback in the market. So maybe we've already chewed through what he talked about there, but then we also rallied 6% last week. So anyway, not too much of the market, not too much of the market, but I think at the end of the day, what you have here is Paul saying, listen, we have to take the realization that we just came off of an incredible, incredible amount of stimulus that caused an incredible amount of inflation, and we've yanked rates higher accordingly, and we haven't really paid the piper for all that work yet.
Yeah. Essentially what I mean, these are my words based on the article, actually a couple articles I read, because again, he's not in the media a lot, so lots of
Right.
people write about it when he talks. Basically, Paul Tudor Jones is not calling for a nasty recession. It's just kind of a short and shallow kind of Q1, Q2, first half, I think was the exact verbiage used. And he also kind of talked about 2024 being, nah, it's like a year we have to get through, right? It's like a basing or a foundation. And then he's like, 2025, could be a completely different story. We could be off to the races again. He's like, that's too far to look. But he's like, 2024, short, shallow recession, kind of a cleansing process, right? We've got a
Yep.
lot of private equity stuff that has to be reevaluated, a lot of commercial debt that's got to be reevaluated. It's not going
Yep.
to be any massive crash, but it is certainly something we have to work through.
Yep.
Um, which I think is a decent kind of purview of 2024.
Yeah, I think when you look at investor sentiment right now, it's clearly not all that positive, right? So usually when you get this, smack in the back of the head sucker punch, it's when investor sentiment is really high and we're not seeing some cracks in the armor that might be outstanding. Now, I will say this. I do think there's a continued crack forming, and we just saw a minor bank in the Midwest
Yeah.
actually
Iowa or
fail.
something. Yeah, it's
Yeah, in
Iowa.
Iowa, right. I think it was $60 million in assets, so it wasn't a big bank by any stretch of the imagination. But nonetheless, the cracks that are forming there that have been around since mid-spring are a function of higher interest rates, and I do think that there's a chance that that causes some spillover effect, more bank failures, or as we've talked about at nauseum, shotgun weddings, that the Fed forces combinations there. But at the end of the day, I'm with Paul Tudor Jones. Like when you look at things from a broad stroke standpoint, everyone's on pins and needles right now.
Yeah.
Everyone is like, hey, we expect a recession to come. So if one comes, the market might already have that priced. I could talk out
Yeah.
of the other side of my mouth and say where stock valuations are. you could beg the argument that they're actually a little lofty relative to historic norms. But they've come in a little bit more recently here with earnings growth that we're now seeing for the third quarter and the drawdown that we've seen in the equity markets. They're starting to look like their historic norms all of a sudden.
Yeah, I want to go back. I had not planned this. We don't plan these discussions, but I'm actually going to tie something I heard Grant Cardone say on the
Okay.
Money Monday podcast with
Okay.
what might be happening in private equity. So this will take me a minute. So you know who Grant Cardone is,
Yeah.
obviously.
Yeah.
I don't want to. So he highlighted that he is evaluating a property, I think on Michigan Avenue in Chicago,
Okay.
that once traded at $250 million. And again, this is on the Money Monday podcast. People can go watch it. He says he's looking at potentially buying it for $125 million. That's not interesting. What is interesting is he's looking at paying cash for it.
Interesting. Yep.
Cash, right?
Yeah.
And if you're in real estate and buying a property at that size for cash it's like, you don't do that, right? Because the beauty of real estate is leverage.
Right. Right.
However, by buying cash in an unknown environment with unknown vacancies and unknownness, you are de-risking. You have an unlimited hold period, which, oh, by the way, I promise you there will be debt on that building at some point in the future.
Right.
But he's potentially buying it for cash. And where I'm going with this with you is how many private equities or unicorns or whatever get absorbed for cash and stock valuations in the next 12. This is back to Paul Tudor Jones. Man, we've got to get through the next 12 months. But I think part of getting through that is taking all these companies like, what was it? Instacart at 59 billion. It's now 6 billion and reevaluating. And maybe the cleansing period starts in the next 12 months. What do you think?
Yeah, I think you're probably right. What I would be interested in that Grant Cardone deal is he taking that on his personal balance sheet? Or is that he's funding it with a fund of investors?
I believe, and again, this is one interview, a 2-minute conversation.
Sure.
He's raising capital, outside capital. It will be part of his fund I don't know what else to call it. So it'll be some of his, I'm sure, and outside capital. But the real key is cash, no debt.
Yeah.
That's different. That hasn't been done since the 80s, maybe.
Well, I mean, you look at interest rates right now, and even with someone who has pristine credit or a group of investors that have pristine credit, you're looking at 9%.
Absolutely.
And then you're looking at
60% LTV. So, you're coming in with 40 anyway. What's another 60?
Exactly. And then you look at the after-tax profits that you have to make in order to pay down a 9% yield, essentially, that you're paying off. Like those are high hurdles. If you can alleviate that 9%, cut it to zero, shoot, everything looks more attractive at that point.
Yeah, no, I think and the reason I bring it up is not to, I just think it's an interesting idea. Paying cash for assets that historically have always been leveraged, max leverage, this, that, the other, right? You know what? Maybe buy cash.
Here's an interesting question that I have. I speak with some folks from time to time that use private money to fund the down payment.
I've used it. Yep.
So you're not paying a dime down yourself. You're taking a private investor's money and setting it into the down payment for the home. Then you're going to rehab, refi, bang, kick the person back out their money.
Yep.
And I'm just wondering where rates are on those right now. What is that private
hard
lender
money
getting
is
paid right now?
Hard money so there's two things. There's hard money and private money. Private money can be negotiated, but I have some private money lenders that are 9-10% today. Interest only, usually short term, 1 year or less. Hard money today is typically 2 to 3 points plus 12% and short term money. Interest only.
So obviously everyone's looking for that private lender if they can find it.
Yeah, if you have a reputation and all that.
So with that, just back to that private money lending real quick, is that an annual rate? Like if you're clocking in at 6 months as opposed to you're paying them 4.5? What did you say? It was 9%?
9. Interest only 9%. So so if you get in and out in 6 months.
And what was it 2 years ago?
Oh, I got some at 6.
Yeah. See, what's interesting is the delta hasn't changed that much. So I guess the delta over the delta
300
has changed
basis points
meaningfully. Right. Yeah. So the spread over a 10-year treasury has, before it was 5%.
Right,
now it's not 5. I guess it is. From 9, it should be at 10, whatever. I guess it's not that different.
Close. Yeah.
Yeah.
But again, the whole deal with let's go to the next question.
Yeah.
If getting private money a year ago, maybe 2 years ago, on a scale of 1 to 10 was a 1, meaning it was remarkably easy. Maybe it was a
Yeah.
2.
Yeah.
Today, it's like an 8. So not
Yeah.
only so the rates are about the same, but the pool is much, much less.
I think that's a function of the fear in the market, right?
Well,
It's
that and
got to
you
be.
could get 5 points in a non-risk, that's what it is.
That was
You
my
just
that
keep
was my second point you took from me.
yeah. Let's just cut to the chase.
Yeah,
Why
yeah,
do I
but
wanna have the risk?
but at the same time, though, I guess talking to that second point, the spread is still not different, though, right?
But 5 is not 0.
Correct, correct, correct. It feels different. That's a great point. Psychologically, yes, when you can sit in cash and get paid 5% versus sitting in a bank and getting 0, you're like, okay, why am I taking on undue risk to
Yeah,
go out
and you're
there?
hearing about all these things blowing up and all the risk and the housing crash and blah, blah, blah. It's like, "No, I'll take 5% and jump on a cruise ship. I'm good."
And last thing I'll ask you on this, because I know we're kind of in
Sure.
an avenue right now that we don't
That's all
usually
right.
travel in, but
It's fine.
is your experience with private money lenders that they are, for lack of a better way of putting this, mom and pop?
Yeah, I would say so I've borrowed probably 8 or 9 million bucks collectively. I would say, yeah, I would, yeah, everybody I had borrowed from probably had a net worth X house of roughly 7 figures, but so not massive. I'm
Yep.
not talking 10, 12 million bucks.
Yeah, and I just look at it and ask that question because, say, hey, you borrow 100,000 from them
Uh-huh.
and you're paying them 9% right now. Like that's 9 grand, right?
Mhm.
And so that's not that remarkable amount of money, and they're sourcing it deal by deal with them. So it's like, to think about
Yeah.
creating big scale on it is really tough to do at the end of the day.
Yeah, yeah, very tough to do. It's where I like to live. I'm not borrowing today because there's just the deals don't support it. But that's why you see people like, Grant and others syndicate, right? Only do accredited investors, create 403, whatever the hell it's called,
Yep.
right? Just create this big bucket that you use at your discretion. So,
Yep.
yeah.
Yeah. Totally get it.
Well, Life Goal Investments, where can people find you? Because you do 60-second education, which I didn't think was possible, but you make it happen.
Appreciate the heck out of you. Yeah. Find us at Life Goal Investments on both Instagram and on TikTok.
Thank
Appreciate
you.
you, Michael.
Mhm.